Welcome back to another edition of the Financial Jargon Series on your retirement masterpiece. This is a show where we take the words your advisor or anybody who's trying to sound really smart, maybe like they know more than you do. They want you at least to have that impression, right? And we'll translate those genuine Wall Street gibberish into plain English for you. I'm Darren Vilardo, the founder of Tekton Wealth Advisors. Today's word sounds fancy, but I promise you already own a bunch of them. And that is, today's word is asset. So an asset is just something you own that has value. That's it, pretty straightforward. An asset is something you own that has value. Your house, your truck, your savings account, your 401k, your business, all of those are assets. And here's the part nobody tells you, and that is not all assets are created equal. So here's how a pro might describe or define an asset. An asset is any resource owned by an individual or entity with measurable economic value and is expected to provide future financial benefit through its use, sale, or income generation. Right. Yeah, again, you have my permission. If you hear anybody speaking like that, whether they're using those verbose language or they're being that arrogant, if you will, you have my permission to turn and walk away. But here's what that actually means, the plain English version. Your assets come in two flavors. First, we have liquid assets. These are dollars you can actually use today, this week, this month. No penalty, no tax surprise. This is your checking account, your savings account, your money market, your brokerage account. If you needed it tomorrow, it would be there tomorrow. And then the second type of assets are long-term assets. Now, these are dollars working for your future, but there are some strings attached. Think about your 401k, your IRA, your Roth, your house, your business. They are absolutely 100% yours, but if you touch them too early, at the wrong time, in the wrong order, and there can be a real price to pay, both literally and figuratively. So here's why this matters. You see, when your paycheck stops, think retirement, the order that you spend your assets is just as important as how much or how many assets you have. Two people can have exactly the same number of dollars on paper, but if one person pulls it from the wrong account, take from the wrong asset, well, then the other person keeps a whole lot more of it. That's a really big deal. So here's the question I'd love for you to sit with today. If you had to pull $20,000 together in the next 30 days, interesting exercise, isn't it? If you had to pull $20,000 together in the next 30 days, do you know exactly which account it would come from? And just as importantly, do you know what it would actually cost you? Penalties, taxes, early termination fees, however you want to describe it. Where would you get it and what would it cost you? Now, if you've never sat down and sorted your assets by what they're actually for, and not just where they live, well, that's a conversation that changes everything. And it's a conversation that we have here at the practice literally every single day. We serve people and not products. I'm Darren Vilardo with Tekton Wealth Advisors. Next time, we're going to cover the other side of that net worth equation, and that is the liabilities, because what you owe matters just as much as what you own. Thank you so much. God bless.